All right. So I'm sure a lot of you have heard of leasing. You may have heard it on an ad. Leasing is basically renting a vehicle, but it's long term. You're signing for it. Okay. So I'm just going to highlight that because that tells me I've covered it. And a lot of people see leasing as an alternative to financing. Okay? So it is basically financing, but the catch is you have to give the car back. You don't get to keep it at the end. Okay? That's the downside of leasing. Basically, you are paying for depreciation and the use of the vehicle, and you do have the option to buy the car at the end of the lease. Just remember that. If you like the car and you got used to it and it does everything you need it to do, they'll give you a price. Normally at the beginning of your lease, before you sign, they'll say this is your buyout price if you want to buy it at the end. And by the way, if you go to a dealer, a lot of those cars you see on the lot that are used are actually leases that someone leased the car and brought it back. Okay? And now the dealer is going to sell it. So they made money with the lease because not everybody can afford a brand new vehicle, right? So you just lease and you get that brand new vehicle. It smells so good, right? You drive it for 2-3 years, whatever you sign for, you bring it back. Maybe you get a new one again, another lease, you keep leasing, but that used car now get to sell and make money off of it again, right? So lease plus used, it's a pretty good business model, to be honest. The lease payment is comprised of, right? If you're thinking, what's in the lease? They know that the car is losing value, so they want to make sure they get that back. They know that you're going to scratch the seats a little bit and the paint and some chips and so forth. So they're accounting for that. There's also something, right, the mileage that you accumulate, because that's the number one factor for your car losing its value is the number of kilometers that you put on. And obviously they want to have a bit of profit. So all of these things are in that payment that you're making. Okay? So here are some definitions you need to know for this particular unit. Okay? There is a down payment, but the down payment is not taxed. Okay? Did I put security deposit somewhere? We're going to add that here because they added that last year. Security deposit, try to squeeze that in. It's not the same. I thought it was the same, but a down payment is not the same thing as a security deposit. So sorry, I'm going to zoom into that, hopefully. I'm going to try to make it short and sweet. Okay? You get this back if car is returned without damage. That's how I'm going to write without, just to make sure we can fit that. Without damage. So it's kind of like, I don't know if you ever rented an apartment, but you also put a security deposit down when you rent an apartment. If you are done with the apartment and you haven't trashed it, you usually get that money back. But if there's like holes in the walls and the floor is messed up, right? Like whatever, you have to, the landlord will keep that money and repair any damages that may have occurred. So security deposit, the province has talked about it just last exam, and I thought it was the same thing as the down payment, but it's not. Okay, so now you know it's different. Lease payment is the amount paid per month. This is taxed 12%. So the lease payment, the actual payment, is taxed 12%. Okay? Term of the lease, that's the number of years or months you have the car and make payments. Also known as the maturity date. Okay? The term of the lease is the same thing as the maturity. Okay? Residual value, what is that? Remember that a little bit from when we did depreciation? Is the adjusted price due to depreciation of the vehicle after the lease. The cost to buy the car at the end of the lease. Okay? Usually stated as a percentage. It is calculated based on the initial values or the sticker price. This is taxed 12%. That is important to highlight that. I wanted to add, yeah, I'm going to do the buyout later. Oh, the buyout is down here. Yeah, so we're good. So there's the residual value, and then there's something called the guaranteed residual value. Folks, these are basically the same thing. The only difference is that it is stated as a fixed dollar amount. Okay? It is stated as a fixed dollar amount. So let's say you buy the car, or you lease the car that is worth 30 grand at the very beginning when you drive it off the lot, when you sign. And on that contract, it might say that 18,000 is the guaranteed residual value. So they'll have a dollar amount on the contract, not a percentage. So let's use a different color and just say that, right, residual value, when it's just residual value, it is usually stated as a percentage. That's the difference between this one and this one. So it shouldn't throw you off. With this one, you just have to multiply by the sticker price. With this one, you don't need to multiply, it's already there. Okay? And this is also taxed 12%. I'll tell you this, when it comes to leasing, everything that is taxed is always taxed 12%. Remember that. Because you're dealing with a dealer, so it's always 12%. Okay. Buyout. The term buyout refers to the amount a person would have to pay for a vehicle after the lease period is over. To calculate the total cost of buyout, taxes must be applied to the residual value. Highlight this part. Last definition here is the mileage cost. This is the biggest disadvantage of leasing, okay, right here. The mileage cost, most lease agreements have a limit on the amount of kilometers you can drive. So I'll highlight that a different color. Okay. Most leases, there's a limit. It can be stated as 10,000 kilometers per year. That's what it could say. So a 3-year lease would be, oops, that's a typo. If it's 10,000 per year, then a 3-year lease would be 30,000, correct? Can we change that, please? It's a 30,000 kilometer, or it could be stated as a fixed amount. Example, you have 100,000 for the whole term. The lease agreement will state the cost per kilometers. Example, 15 cents per kilometer if the limit is surpassed. This is taxed 12%. So you notice that everything is taxed 12%. What's the only thing that isn't taxed on this page? Down payment up here. Down payment up here. Okay, that's the only thing that isn't taxed ever. So it's almost like your lien search. Okay? All right. Let's go look at some formulas here. Some calculations. I will say this. At the top of this box, okay, there aren't many, like this is the last bag of formulas that I'm going to give you that takes up significant amount of room. Okay, so you should have on your study sheet, you should have leasing as the heading for this, and then write down these formulas. Okay. Make sure you tell yourselves what they do. I'll explain them because I think, because I made them up, so I need to explain them what they do, right? If you ever have to figure out, listen carefully, kilometers past limit, like, because they have a limit, and sometimes you need to figure out how much over are you. You basically take the kilometers driven minus the allowance per year times the number of years. Okay, that's what you're going to do there. Or you can just go kilometers driven minus allowance. Like if there's a fixed number, then you subtract those two and then you figure out how much over you went. As soon as you're over the allowance, they start charging you every single kilometer. Okay? Mileage cost. So these two are very much related. They're linked. The mileage cost would be kilometers past limit. You figured it out up here, correct? So once you determined how many kilometers you're over, you will multiply it by the rate per kilometer, and then you multiply it by 1.12 if you want it after tax. Okay, so this would allow you to figure out how much they would charge you for the extra mileage. We call it mileage even though it's kilometers. Folks, just make sure you understand, if the question said before taxes, you would not do this step like this last one here. You would omit that. Okay? So that would be before taxes. If they want after taxes, obviously times 1.12. Most of the time, the province asks for after taxes. That's why I just included that. So these are linked, very much linked together. They go hand in hand. I'm also going to tell you this. It may be that the question just flat out tells you, you went 5,000 kilometers over the limit. That's it. You don't need to do all of this here. You already know what it is, so just read carefully. You just plug it in here and you go. Right? Next, total payments. Yeah, if the question says what were your total payments overall? You take your payment, you multiply by the number of months, and then you multiply by 1.12 because that would mean after tax. Okay. This is the big one here. If the question ever asks for total lease cost, this is a very popular one right here. You would take your down payment. Do you notice that it's not multiplied by anything? So it's not taxed, right? That's how we want it. Plus, you would have the payment times 1.12 times months. Okay? This is essentially like this part right here. Whatever number you got, that comes back right here. Okay? These are what we call our total payments. Label it, please, so you know what is happening here. So if you want the total lease cost, you take your down payment if there is a down payment. You would figure out your total payments, which you may have already done before. So you just plug that number in here if you've already done the work. Plus mileage cost. The mileage cost, by the way, folks, is over here. Okay? So the mileage cost gets added here. So there's like 3 components that could potentially make up your leasing agreement. There could be a down payment. This one is always there. There's always a monthly payment. You can't lease a car without making monthly payments. So this one is always there. Mileage and down payment may be missing. They may not be there. So in that case, you just ignore it. Okay. All right. Residual value. I'm going to rename this, okay? Because I learned something from the exam. So we're going to call this the buyout. Cross this out and call this buyout. The province says we're going to use buyout, and we require to figure out the residual value times 1.12 if it's after taxes. Okay? I'm going to add something here. Residual value is the price, right, multiplied by a percentage divided by 100. This is probably worth adding. If it ever gives you a percentage, like let's say the residual value is 50%, then you just go 50 divided by 100 times the price it started off. Okay. I will say new price here to be more specific. This is the new price times percentage divided by 100. Fun stuff, eh? Leasing is, yeah, it's a bit tricky, so you gotta watch out. So if a question ever says, what's the total cost, including the actual purchase of this car, right? You would take your total lease cost and add the residual value, including all taxes. So I'm gonna call this buyout here. I should have changed it. I forgot to do that. Okay. And that would be including all taxes. So let's go ahead and do some work here now with these formulas. Okay, 47. Let's leave advantages and disadvantages for leasing for tomorrow. I'll just do that first thing. Let's go to 49. There we go. Make sure you have a leasing section on your study sheet. Don't just throw it somewhere, all those formulas. Make sure that's leasing and you box that in, okay? So on your study sheet, you should, maybe if you can do it right now, just say leasing, go see page, what is it, 46? Yeah, for now, just say go see page 46 on your study sheet for leasing. All right. A minivan sells for an MSRP of $28,500. That is just telling you when it's brand new, that is the price. It leases for $479 a month plus tax. So it means that this still needs to be taxed to figure out the total lease. And there's a term of 24 months. That's also important. There's a down payment of $1,500. And the guaranteed residual value of the vehicle is 62% of the MSRP. Can we get rid of the guaranteed? Because I told you that usually if it's guaranteed, it'll be a dollar amount. But really, it wouldn't matter. You just go with what they present to you. So the residual value of the car is 62% of the MSRP. Let's write a little note here for this. The amount the car is valued at the end of lease. That's what that sentence is telling you. Okay, if you want to find out how much your car will be worth when you're done the lease, we're going to figure out 62% of what it is brand new. Okay, so that's what we're going to do there. A, calculate the total payments amount after tax. There it is, the key word, after tax, total payments. Okay, I'll write out the formula. It's the payment times the number of months times 1.12. And we're told it's $479 times, you got to watch out with the months, because sometimes, right, this will be in years. The term will be in years, so you just got to multiply it by 12 to get your months. In this case, we know it's 24 months. So they've already done that. And we're going to multiply our answer by 1.12. This effectively taxes everything. Okay, so here's our dollar amount. 479 times 24. I hit equal there once. So 11,496 is what you pay before taxes. If you only multiply these two. multiplying that answer by 1.12 includes the taxes. Okay? So this is how much you will have made in payments, how much you would have contributed in payments alone over the 24 months. All right, so that would be, go look at the formula, plug it in, and go. B is asking, calculate the total cost of the lease after tax. I will write this down. Total lease would be any down payment, if there is one, plus, this one calls for payments times months times 1.12. This would be your total payments. You want to include that in your lease. Plus mileage. Does this question mention mileage at all? Does it give you anything?
No.
No kilometers, no price per kilometers. It doesn't mention it at all. So I'll just say no mileage. Okay? No mileage mentioned. And this is what I mean. My formulas are like, if it's all there, then that's what you would include. Okay? So we go ahead and figure out down payment. Is there a down payment? In this case, clearly, sometimes there is no down payment. So you just go $1,500 plus. Do we already know this part?
Yeah.
We do, but I'm going to assume we were not asked to do this before. We're just going to copy our answer from up there because we already know what it is. So it's $1,500 plus $12,875.52. $14,375.52. That would be the lease, right? The lease itself. You sign for 2 years. When you're all said and done, you can count on having paid this much money. You don't get the $1,500 back. When would you get it back? If it said security deposit. The $1,500, if it said security deposit, you get that money back. Let's keep going. Calculate the total residual value of the minivan after tax. Okay, so here I have to make a change again. They did this at the end of last year, so I had already ordered these booklets. We're going to say calculate the buyout value. So we're going to get rid of total residual, and we're going to say buyout. Calculate the buyout value of the minivan after tax. So here it is. Buyout is residual value times 1.112. Sorry, 1.12. That's how you figure out what the buyout is, how much you're going to have to pay to buy it at the end. So we need to figure out the residual value first. I'll do that on the side here. Residual value is 62% of MSRP. So in math, right, 62%, we turn that into a decimal. So it's 0.62 of in math is times, but even if you don't know that, it's always, right, decimal times the dollar amount. And what is our MSRP? It's $28,500. And here we go. It doesn't matter if you go 28,500 times 0.62 or the other way around. 2 times 3 is the same thing as 3 times 2. And there it is. This is how much you would be looking at before taxes. So this is residual value. This is important, so I'll just underline that. I won't circle it. But because the question says buyout, it immediately means taxes. But the question says after taxes anyway. So we take this value and we apply taxes to it. That's it. 19,790.40. They call me Speedy Gonzalez. Andale. Do you like highlighters? I don't know. I used to not like them when I was in high school. You couldn't even read my writing in high school. Okay. And so this number, we figured that out. We plotted it in there, and then we're good to go. Usually, it doesn't, like this one that I'm about to do is not very popular, but calculate the total cost of leasing. So you want the total cost of leasing and buying the car at the end of the lease. So what did I call it in the formulas again? 47. It's the total cost including purchase. So total including purchase. So what are we going to add here? We're going to go lease plus buyout. That's really what's happening here. Both of them are taxed already, so I don't need to worry about, don't double tax, please. Okay. So where's my lease here? It's 14,375.52. And the buyout, I just figured that out. So really here it's just adding. Just add the two numbers that you got before, and you get 34,165.92. And the reason why I like to do this is because sometimes the question is, well, look, if you lease it and buy it, this is how much it would be. Okay, how much would it be if you just bought it straight up, 28,500? Let's do the math here. 28,500 times 1.12, because you pay 12% on a brand new car. You'd be paying 31,920. So you do pay more with leasing if you want to buy it at the end. Okay. So that's that. Okay. I know your brains are probably hurting. So what I'm going to do, the other ones all have mileage on them. So all I'm asking you to do is two questions. So page 54, question 1. It's A and B. Okay, page 54, question 1 for today. Plus, update study sheet. Please update your study sheets on a regular basis. Get it out of the way. Just do it. Okay? Make it detailed. Have a leasing. Box it in. Okay? You got 5 minutes